In the constantly changing world of fundability, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. Welcome to the Get Fundable podcast with your host, Merrill Chandler.
Hello, everybody. Welcome back. Merrill Chandler here at the Get Fundable podcast. I'm your host, and this episode, we're going to be going into our next edition, our next version of the Into the Madness series, where we're going to be talking about understanding how TransUnion, their raw data called the consumer disclosure, how that raw data is being listed and how you can understand what they're saying and why they're saying it and how this information makes you more fundable. So when we come back, we are literally going to go down that TransUnion consumer disclosure rabbit hole. So I'll see you in just a second. Welcome back, everybody. Merrill Chandler, your host of the Get Fundable podcast. And the next thing we're talking about in this installment of the Into the Madness series, I just love that name because credit bureaus lose money when they give you a consumer disclosure. That's just the facts. The other problem is they don't want to give you all of this raw data, because if you have all this raw data and you have someone like me, by the way, I'm the only one I know who's actually telling borrowers about this stuff. But if you have someone like me who's going to walk you through what information is in there and why it's important, or why it's being why they're kind of hiding some of the facts in gobbledygook, is because this information builds your 24-month look-back period. This information is what they use to establish not just your look-back period, but the metrics that both FICO and lender software use to approve you and or give you higher low rates or higher or low approvals. So let's continue on the TransUnion. Now, we're not going to be discussing like how to dispute inaccuracies or doing an accuracy audit. I'm here to show you how this information positively or negatively impacts you. So the first thing we want to look at over here is this is the file number, that top right. And guys, this is another one of those you can listen, and if you're driving home, just keep binging. If you're working out, keep binging. But this is one of those where you really need to see, and I highly recommend that you follow the second Into the Madness episode or installment where you order all of your personal credit consumer disclosures. Then you can look at what yours look like in each one of these sections. That's where it's going to be the most powerful for you. Me showing you a sample one with all the personal data marked out is only going to get you so far. So I highly recommend that you listen to this, that you watch it, and then you use your personal consumer disclosure, and in this case, it's TransUnion. So in the top right, it gives us the date of the report, but if you are going to do an accuracy audit, if you are going to dispute some of the things that you've learned here in the podcast, at the boot camp, from my book, you're going to want to use that file number in any correspondence about this particular version of the report. Remember, if they improve things, delete things, change things, update things, synchronize things, they're going to give you a new file number, and then you need to operate from that file number. And what's funny is TransUnion, Experian, Equifax all use a different term. File number on TransUnion, some are and I shared with you what it was. I can't remember right now what it was on Equifax, and then Experian we'll be looking at in the next episode. Now, under personal information, there will be one or more social security numbers. Now, these are blanked out, but I'm showing you where they would be, right? The date of birth. If you have one or more dates of birth, they're going to show you how many you have. We have clients all the time who have whose files are conjoined with a spouse, and they may have the spouse's social security number. Fathers, juniors and seniors may have two social security numbers on their file, because remember, I told you last time in the Equifax one, bureaus cast a wide net. They just want to bring everything in and then let lender software and FICO software parse out all the data or make sense of the data. Their job is to collect as much as possible. Your job is to give them only one set of identification data. That's what we build when we build that personal borrower identity. So look to see how many dates of birth you have. Look to see how many social security numbers are listed. We want only one. Now, ultimately, notice here where we literally are describing there are a dozen addresses here, and look at the dates reported. Notice how it goes 2000, just like on Equifax, 2013, 15, 17, back in time for 3 different 2014s, then 2017, 15 backwards again, backwards 17 and 17. Every one of these are all every one of these except for the Guam one are in the United States. But notice that they go back in time. They're all over the place. This does not send a positive fundability message, because ultimately you can have 13 former addresses, but like on mine, like I showed you on mine, I want only one version of my name, one address, my current address, one address, one date of birth. Here, notice they have multiple phone numbers, and 1, 2, 3, 4 numbers were listed. We've redacted those. You want one phone number. And then finally, we want, ultimately, we'd like to have 2 employers. It depends on if you're using all of my strategies. If you've been to the boot camp, getfundablebootcamp.com, you know that this is vital. But this was one of my team members back in the day, and so it's misspelled. So that's something that I want to correct, and I want to make sure that I also have if you're in the entrepreneur real estate investing, if you're looking to create a fundable entity, right, a qualified fundable entity, then you want the fundable entity as one of your employers on each of the credit reports. Now, I said this before, I'll say it again. FICO's data is almost irrelevant. We don't care ultimately what FICO's data is, because FICO downloads its data from TransUnion, Experian, and Equifax. What we want is the data that is in each one of the credit bureaus to be crystal clean and match across all 3 bureaus. Then we look at FICO, because whatever ends up on FICO is what gets scored. So your My FICO credit report is a scoring report. This is the raw data. So let's focus on cleaning up the raw data at the bureaus, and then that will give pure and data for FICO or mortgage credit reports or auto credit reports to pull perfect data. All right, so that takes us there. Now, this is the same. They have all of their different keys or ratings, the legend for how they're going to do this. But notice, TransUnion will list all the adverse accounts first. And so what they are trying to accomplish is give you a chance to see what is in the way. And so it gives you the original charge-off amounts. It gives you what the amount is, what the status is, etc. Also, when you're looking at this, we also want to look at what are the balances? When was the scheduled payment? Remember, we talked about the 24-month look-back period. This is where they draw that data from for as long as it's been open. The balance, there's a scheduled payment, how much it was, but since it's been charged off, there are no scheduled payments, but it's showing what's past due. But we'll look in a moment for a positive one of these, and you'll see. In fact, it's the next page. So let's take a look at a Chase card. So here is date updated, last payment made. When was it? When was it? Now, some people have said Equifax talks about date reported. So you may want to start with date updated as the reporting date, and then ask call the credit bureau, or call in this case, JP Morgan Chase Bank, and ask them, what is my reporting date? Do not take this as the number until you've vetted it or gotten at least 2 more answers that say that it's that the reporting date or the date it's updated, same thing, is 12/27. It's a current account. Now notice here, but this is what we want to watch. Notice there's a balance, scheduled payment, how much is past due. But down here, that scheduled payment, when they're giving us what a scheduled payment looks like, they're calculating when the payment was made, right? When is it scheduled? And then up here, it says, when was it paid? So those data points are what they use to calculate the whether you paid on time that month. And when I said, I know for sure that it's 3 months, but I believe 3, 6, 12, and 24 months, when you've made a timely payment and paid it to 0 on those dates, your FICO is rewards you with credit score points, and the lenders reward you with fundability or approval points. The underwriting software that lenders use are going to look and see when was it due, and when was the last payment made. All right. And you can see month by month, all of these are given across, etc. Now, let's go to another, let's go to a just like we did in Equifax, let's take a look at how they do collection accounts. So here, you'll notice that the original creditor was a Mountain Medical, right? It's in collection is the status, but it's an individual account, not joint, and it's been placed for a collection at a collection agency or an attorney, and it gives us when it was placed. So technically, because this is a medical, it will remain on a credit report for 7 years unless you have found in your audit that it shouldn't belong there and the credit bureaus agree with you. Okay, but this is how this right here is how a collection account is reported. If they do not have much of this, if you only have 2 or 3 of these accounts that are listed, and if you only have certain information, if you don't have an amount, if you don't have a date, if you don't have a creditor, there's what's called a minimum amount of information that you must have, that must be reported for this to stay on your credit profile. And we'll be having a Sky, let's put that on our podcast about how to evaluate a collection account and what makes it viable on your profile. Thank you for putting that there. So those are collection accounts, and that will be a fascinating episode, guys, because there's so many cool things that you're going to be able to see about how collections work. All right, then collection, etc. All right, now let's go to the next section is for regular inquiries. So a regular inquiry is also known as a hard inquiry. This is for an express business purpose. It says that it was for Citibank National Association of Banks, because remember, National Association means all these Citibank branches are part of a national association. It's part of the banking process, but that's what NA stands for, is National Association of Citibank branches. And when it was requested, and it's, of course, since this is the TransUnion report, it's just reporting the TransUnion. But notice the account review inquiries. We literally have, there's TransUnion. That is when this was pulled. There is a Fact Act free disclosure when that was requested. So notice when it comes to 4/11/2019, 4/11/2018, these are this is the process of getting it from since they don't count, they count it all, annualcreditreport.com. My FICO, because this team member had a My FICO account, and when it was requested. Then you've got TransUnion Interactive, which is also here, Fair Isaac via My FICO, and Bank of America. So all of these account reviews are literally just reviewing. They're checking out, hey, is this person worth sending an offer to? We need to be opted out so we get fewer to none of these. All right. Here's a Goldman Sachs loan. Here's a Prosper loan. Each one of these are marketing pitches. This is determining whether or not they want to send this particular borrower any advertisements or any opt-ins so that they can become a offer client. Now, as we've said in previous episodes, we are at cause in our financial and borrower profiles. We are not at effect. We do not respond to these offers if they come. We do not accept the offers. We do not fill out the application. We never use a promotion code or an opt-in code or an activation code. If there's a code or if there's a number you put in there, we never use those, because that's where you end up on more lists and more susceptible, and you're sending a message to FICO interprets that as you being open to more credit. If you like an offer, as I've said, I'll repeat myself. If you like an offer from Wells Fargo or Chase or wherever, you then call that institution, or if there's a branch, you go to that institution and you ask them to tell you about this offer, but where you do not have to put in a redemption code. All right? Because I'm not saying some of these offers are not good. I'm saying don't play the game according to the way they are trying to take advantage of your ignorance. All right? So they have not trained us. They have not trained us on what's going on. That's why you and I are in this together, and we're about making sure that they do not leverage their knowledge over us. All right. Now, the next section was credit report message. Now, this individual has opted out, and so these promotional lists are. So some of the offers have been cut out completely, right? And this opt out is set to expire in 2020. Now, notice a third-party supplemental. Now, this I want you guys to see. You guys got to understand. Remember, I've given you the feedback to go to getfundablebehaviors.com. Getfundablebehaviors.com, so you can see the 150 potential possible FICO behaviors, and you'll be able to see for yourself the 40 that plus or minus that FICO uses. Okay, this is vital, because one of the things that you're going to see there, and you'll notice that they are triggering it here, number of conviction or number of evictions. Sorry, you have to go to a different place to get public records, but number of evictions, they're counting how many times you've been evicted. Auto finance inquiries, see that 369 and 24. Cash advance inquiries, rent to own inquiries. These are all hard money predatory lenders, subprime lenders. If you're going to these places for money, they are counting against you. Now, auto finance inquiries is not for an auto loan through a lender. Auto finance is one of these that we carry our own paper. Come in, everybody gets funding, right? In Salt Lake City, it's called State Street, where all of these little auto dealerships that carry their own paper, those are usually more expensive and are also subprime loans. So when somebody says, I want to be able to pull credit, they find out the type of business. And in this case, auto finance inquiries are going to show that it is that's the type of inquiry, the cash advance. When that subscriber pulls credit, they report it as one of these subprime outfits, and then they're counting it against you. And so notice this borrower has tried a couple of times to be able to go for lower value instruments in a bid for this was and I'm assuming based on the timetables, likely that this is not our before they started working for us, right? Where we learn these things. But even my team members, even people that are close to us, sometimes we got to do what we got to do. I'm not judging what you have to do to make it, to survive, much less thrive. What I do care is that you know the impact. And then you and I are square. Just know the impact and what it means. And like I said, with my book or the getfundableBootcamp.com, you can find out what to do about it and how to avoid it or how to recuperate from it by getting a deeper dive into this, or watch all damn 60 plus whatever we have so far of all of our boot camps. But notice, paid charge-offs, open auto charge-offs, all open charge-offs. These they keep track of everything, guys, that's in the hard money, or hey, we're in a difficult place and we need to use extraordinary measures to get money. They're measuring it. And this is how you can have a consumer rookie borrower profile instead of a pro borrower profile. We want to show up as, and every one of these are measurements of your behaviors. And that's what we want to protect against. We want to make sure then all of the other information, consumer rights, et cetera, through the end. So each one of these are different. There's work to do for this particular individual, and we want to make sure that you are aware of what is required to create one identity, one SOCH, one date of birth, one name, and one address, one phone number, and 2 employers. If you're implementing, you only need 1 employer if you're not implementing the qualified fundable entity strategy. If you are, then you need to have 2 employers in this section. That's what I've got for you for TransUnion, guys. And in the next episode, we're going to be discussing the last of our Into the Madness series, and we're going to be discussing Experian. So I will see you on the flip side. Have a spectacular rest of your day. And I love that you have joined me for so long in becoming fundable. This is all about fundability, and I'm glad you've joined. You guys have a spectacular day. Godspeed, and God bless.
Thank you for listening to the Get Fundable podcast. Please leave comments because Merrill would love to read about your aha moments from this episode. And be sure to visit getfundable.com to read our blog, get important links, join our community, and much, much more, like ordering Merrill's tell-all book that is changing the world, The New F Word. And you got to tell your friends about this podcast because we want them to get fundable too.